Top of the morning, back at it again with another one. And we're looking at the NASDAQ and the US 500. Now, before I discovered this, life was pretty dull. But ever since then, it's only been up from here. And I hope that this will help all of you out if you applied correctly. You know? So, once upon a time, I needed an indicator or some tool that would be able to tell me when price is more than likely about to reverse. That was the RSI, right? If it told me we are in oversold conditions, I'd buy, try to catch the bottom. If we're in overbought conditions, I'd sell, trying to catch the top. But then it's a lagging indicator by nature, so it's pretty hit and miss. Yo, getting a video. My bad. Let me just answer this quickly. My bad. Yo, beautiful. Can I please call you back? I'm recording something. Okay. YouTube is gonna hear you on the phone, but it's fine. It's all good, baby. I'll call you just now, nah? Sharp. My apologies for that. As I was saying, I needed a tool which would allow me or help me to catch the bottoms of certain price moves. I'd rely on the RSI, but by its nature, it's a lagging indicator, so it's pretty hit and miss. But now, with what I have now, I was able to enter at the bottom and ride it up. I'm still in the trade right now. I'm gonna speak more on it, but just had to give you all that context. So let's dive into it without wasting any further time. We're looking at the two charts, the US 500 and the US 100. So I'm not looking at the futures contracts. I'm in South Africa, so I trade CFDs, right? I'm not really gonna go into the nitty gritty about that. That's for another video. But I trade CFDs. We may be about to reverse now, but we'll speak more on it. So we have these two charts. They move. It's pretty much the same thing as you can look. It's peak there, low, another peak over there, low, peak again, and then we begin to sell off, right? Um, yeah, the two charts are correlated. So the tool that I use that is a step above, multiple steps above the RSI. Only whatever indicators that is, it's SMT, smart money techniques, a crack in correlation between two assets that are highly correlated to each other. Correlation means they move in the same manner. So I'm just gonna turn on the lipstick and then we're gonna explore this phenomena further. Turn on that, right? Increase. We're gonna start on this side here. So you have this little thingy there. That's that little thingy there on NASDAQ. Then the move up, and then the move down. Move down. Just before the move up again, right? Let's look at the US 500. So you can see the correction, it's sloping downwards. I'm looking at the lows. Whereas the correction on NASDAQ, it's sloping to the upside. We have the push up, right? Let's look at the high here, just before price started to sell down. We had it price sloping slightly to the downside here, it's sloping slightly to the upside, and then it pushed down, it pushed down. Let's look at this move here before price moves up. This moves here before price moves up. This correction, price is slightly sloping to the upside here, price is slightly sloping to the downside. What happens? Price moves up. Let's look at this correction here before price moved. The correction before price moved. On this side, it's sloping slightly to the upside. On this side, it's sloping slightly to the downside. Price moves. Let's look at today. Today, when I hopped on the charts, it was about 3 a.m. Eastern Standard Time. In South African time, that's like what? Like 10ish, something like that. So that's one of the benefits of living in South Africa. My mornings, it's London session, and then my afternoons, it's the New York session, the AM New York session, and then nighttime, it's PM session going into Asian. But I mostly trade the AM session. Today, I was like, let me fiddle around with, the London, and it paid out quite nicely. We're going to look at the executions as well shortly now, but like without deterring from what we're focusing on, this crack or like this change where these two assets move in the same direction or manner, and then we see times, or we observe times where they don't move the same. Let's look at the most recent one today, right? That's today. So you can see sloping up, we're sloping down, and then price began to move. I bought right here. I caught that, took some profits off there, and then took some more profits off there, and I'm still looking for price to push up to the upside. I'll explain why I have that bullish bias. But that tool, just look for it. If you're looking for buys, study the lows of both assets. If we have this phenomena, instead of sloping up, it's sloping down, it's an entry confirmation. I mean, it's an entry confluence. On top of course, you have to be in the right context. Order flow, you have to be in the right direction. You have to key off the right PD array, which is point of entry. If you need me to speak more on that, let me know in the charts, and I'll share my interpretation of the concept I got from my mentor, ICT, the Inner Circle trader, Michael J. Huddleston. Shout out. If you're looking for the buys, for the sells, study the highs. Study the highs if you're looking for sells. Know what I'm saying? Slope up, sloping slightly down, and the rest is history, right? So that is the tool I'm giving you all for free. Go back test it, see how it treats you, and then we'll talk, right? But now we're going to look at just the Nasdaq and speak more on the trade, right? So today I woke up cool, got to my chart, and admittedly at the time, the only 2 or 3 confluences I was going off of is where price was reacting from, the time of day, and quarterly theory. So obviously the first thing, I have the SMT, right? Compared the lows on the ES to the Nasdaq. That's cool. And then let's look at the higher time frame. Actually, let's go to the 1 hour chart, right? So at the time, price was still here, but when you look at the hourly, I'll just leave those on. When you look at the hourly, you can see we had a very strong displacement to the downside where we left an imbalance over there. So I'm just gonna mark out the imbalance in red like so. So this is our current draw, which is to the upside. We'll be looking to fill this up. We could hit that area and then reverse or make our way up to the half, but this is currently price is trading up to. It's going to the upside. And then if you look at that 1 hour structure, you can see we had a pool of liquidity there. I'm just gonna move this just to delineate. Pool of liquidity, price traded down into it. We had a displacement up. We then got the reversal, or like a correction, and then we began to shoot up. But my main thing was just the draw. I was like, okay, say less. Let's get into it. Go down to the 15-minute time frame. The 5 minute. Let's go down to the 5-minute time frame. Here we are. I saw this order block there, and I also noticed this, how clean these levels are. So I'm just gonna mark that out. Buy side liquidity. So in my mind at the time, I was like, short term, we should get up to here. We should get up to there. And indeed we did do so. Still making our way up to that higher time frame imbalance. We'll see what price does. But then let's talk about the entry now of the particular trade. Oh man. Just maximize this. So as you can see, this down close candle here on the 5-minute time frame, When I saw that, I was like, yep, order block, right? I saw how we were wicking, how price was reacting. It showed me sensitivity, and it hinted to me that we have buy side demand here. So this would be a good idea or a good area to place a buy. Place the buy. Idea was the support of this order block here. What gave me further confluence was the quarterly theory. It's Friday. Um, it's Friday. London session's Friday. That's what this red block delineates. And then within the London session, obviously, we subdivide the session into 4 quarters. So Q3 or the third quarter of any session, day, month, cycle, or whatever, in my personal experience, that's proven to be the most high probability times to enter trades, or rather the best times to enter trades. So that's exactly what I did. I saw this phenomena happening in Q3. I was like, SMT, Q3, order block, higher time frame, or bullish drawn liquidity. It's a no-brainer. I knew where price was leading off to. So then via the higher time frame chart, so I just had to go to the downside, refine my entry, and then ride the wave. And that's currently what we're doing. Like I said, we entered down here, we bought some more over there, and bought again there. We pyramided 3 positions on. We took some off there, some off there. We're gonna take some off over there, and then if we make it to the high, we'll take off some more there. But we'll see what happens. Currently the positions that are remaining are risk-free. Stop loss has been trailed, which is kind of cool, pretty very nice and cool. So yeah. While I was in the trade, I'm so sad, like the previous recording died out on me. Like I ran out of space on my Mac and I spoke on that in the video, but it's fine. This one now will allow me to be much more concise and clear. Even though you won't get to see my trade management live, I'll still speak on essentially what is going through my mind at the time, right? So chart, I'm just gonna move that liquidity, just keep the chart as clean as possible. I'll move also that because you saw the SMT with the US 500 had that area or our target for liquidity. Gonna remove that as well. Gonna remove this order block, remove that as well. Now we're just looking at price. So I've recently been going over ICT's market maker models, and this is something I picked up after I'd already entered the trade, but it gave me further confidence. This fractal here, this consolidation followed by an expansion with the retrace, another expansion followed by the retrace, and then a further expansion. That's what I was like, okay, this is a market maker sell model, right? Accumulation, expansion, first stage of distribution, expansion, second stage of distribution, expansion. I was looking at these candles which offered, or I mean these up close candles, when price was bearish, these offered resistance. So price would trade up into these and then proceed to sell off. In the inverse, now that order flow is moving bullish, I was looking at these same areas to now offer me support. And that's where I added on my pyramid entries. I initially got in at the low there, reversal, went up, bought some more after price was showing us that we having support at this area, and again when price was showing us that we're getting support at that area. All the PD arrays which were acting bearish while price was moving down, I was looking at them to act bullish now to offer me support, up until we take out the buy side liquidity that's above this original consolidation, and then ultimately take out the liquidity that's above these levels here, these equal, it's very sus and straight relative equal highs over here. Just mark that out. Not order block, buy side liquidity. So you can see there, zooming in some more, we're on the 5-minute time frame, by the way, if you haven't noticed. So like I said, I was looking at this fractal here to offer support. So let's look at this. You see this up close candle, order block. I'd look for that to offer us support. Right, look for support from this up close candle as well. Right, and as well as this up close candle here also. And if we can study price, you can see we got that support here. Nice reaction. The down close candle went up, came down again. The wick showed us that we are indeed respecting this area. We got the expansion to the upside. Up close candle, the high. We expanded straight through this. Had that down close. Offered a support. We didn't trade below. We didn't trade below this down close candle, right? So you can see the tail of the down close is there. This one is over there. It's showing accumulation. We got the doji, then we expanded to the upside again, and then we also got support on this upside or up close candle as well, and then we are beginning to expand up. We took out the liquidity that rested above this original consolidation here, took out the liquidity that rested above these relative equal highs here. That was our original drawn liquidity from down there going up. And now we're making our way into that higher time frame or that hourly imbalance that we just highlighted that we saw. Trade is still in play. Let me just show you all. Okay, before I show you my executions where I got in and got out and etc., I feel like this is pretty straightforward. A game changer for me was hearing that using a market maker buy or sell model, the areas of distribution, in this case it's distribution, right? So accumulation, expansion, first stage redistribution, expand, second stage redistribution, expand, smart money reversal would be there. The areas where we got the distribution in this case, that's where I'd look at to us to accumulate or to get support or to buy. If this fractal was if this was in reverse, so accumulated, went up, retraced, accumulations phase 1, went up phase 2, accumulation phase 2, then it reversed. Those areas of accumulation, I'd look for price to then use those as places for resistance, pushing us to the downside until we take out the low or liquidity of that consolidation. Like, it might sound like French or gibberish. If you need me to explain it in a video, just tell me, but that's the gist of it. Market maker models, very nice, very nice, very nice. I'm gonna be looking more into that as it low-key pairs well with the content he put out, ICT I mean, in the 2016 mentorship, so the core content. If you haven't seen it, be sure to check it out. It's all free and it's proven to work. Just get off your fucking ass. But I'm gonna remove that as well. Gonna open this up, go to settings, gonna look at I'm gonna turn on everything, so like positions, orders, executions, and the labels. So here we are. Here we are. So I'm gonna grab a quick screenshot for Twitter. Just give me a sec. Save to clipboard. Okay, cool. So got the buy at the low there nicely, after that candle closure, went in, got into the expansion. We bought another 3, right? Bought another 3 over here, bought another 1 over there. So for the additional 3, after we got that as support, we then entered this one, the additional 1, it was about here, as price was trading into this order block here, which I was anticipating us getting support, and then we expanded to the upside. And of course, the first take profit, which was I took the majority after we cleared this, and then I took some more, another one off after we cleared that. Right? I'm gonna take more off when you get to that imbalance on the higher time frame. Then that'll probably be it. Let me just want to bring this here, because I'm seeing this imbalance with the order block there. So price will probably stop here or make its way up to there. I don't know, but we'll see. That's my new updated take profit. The extras I bought, it's logged, you know. I trailed my stop. I could get stopped out in profit. I won't be mad. Have that one order block, the other order block, propulsion block, and as well as this whole downward move. I'm looking at this to offer support. So if we come down from there, I'm not mad. We in profit, so it is what it is. But as you can see, the executions, I explained the logic I had prior as to why I entered in those specific areas. I showed you the tool that I used to catch reversals, and I just spoke on some, like, I really wish like that other first video would be there so you could hear what I'm saying to myself as I'm in the trade. But it is what it is, I guess. That video was an hour long. I don't think anyone is gonna sit through an hour of sauce, but I'm gonna give you all a smaller video length with the same quality of sauce. So that's that on that. I'm paper trading. I'm not gonna risk my capital on a Friday. I'm learning to be disciplined, and yeah, I must say it was quite cool to sit through this. It's starting to show the experience that I've been able to accumulate as I've been studying ICT's concepts, and it really feels good because a lot of things in my personal life are going south because I'm all in on this, but more on that later. Without wasting any time or going too personal, just want to say thank God for the skill, and happy trading.